In property investment, there are two major reasons you invest, either capital appreciation or rental yield. What's the difference between capital gains, investing, and generating cash flow?
Capital appreciation is the increase in the value of your investment's market price, while rental yield can be considered as cash flow. It measures the income you gain from your rent annually as a percentage of the total price you've paid for the property itself.
Capital gains investing buys the assets with the expectation that they will be increasing in value, while the cash flow investing buy assets that generate income. So, which is better? What's up everybody, welcome to VC. My name is Vincent.
And I'm Chloe. If you remember the topics that we discussed previously on our channel, which is capital appreciation and rental yield, we actually mentioned that we were going to do a comparison between capital appreciation and rental yield. Now, which is more important or suitable for your property investment plan? So let's do a small recap. What is rental yield and what is capital appreciation?
So firstly, let's talk about capital appreciation or capital gains or capital growth, whatever you want to call it. It's a game of buying and selling for a profit. Let's say you're buying a unit of condominium for 300,000 while it is still under construction, and when the development is done, the price is now 400,000, so you sell it off, the balance is your profit. The profit is termed as capital gain. Anytime you sell an asset or investment and make money, your profit is capital gain.
Of course, there are capital loss. That's when you lose money on a sale. The benefits of capital gain is very straightforward, self-explanatory, as like selling literally anything with profit or loss. While there is money to be made through capital gains, it is important to understand the risks. It's tempting to think of selling a property and earning the gain directly, right? When you hear from your aunties or uncles talking about flipping properties, it seems fun, but what exactly are the risks within investing in properties solely for capital gains?
So firstly, it's a formula that you have to keep repeating over and over again. Keep buying then selling, buying then selling. If you stop the game, the income will stop too. For real estate investment, we want you to invest in something that never ends, right? Your money doesn't stop coming when you stop working. We want the money to work for you. That's the point of property investment for us.
Yep. Secondly, for property investors who focus on the flipping games, imagine if you're caught up with a downslide of the market and you can't sell your property. Before the housing bubble bursts, the mindset of many investors was the market would continue to go up. So when the market crashed, properties were no longer worth the flip, and there were not many buyers too.
As long as the market goes up, capital gains investors win. But when the market turns down and prices fall, which something is nobody can predict, these investors lost. That's a big risk to take, especially since the entry of investment isn't just 100 ringgit. Would you actually gamble this way of investment? This really depending on your risk appetite.
So as we said before in our capital appreciation video, how can you guarantee that the property can double in 10 years time? Of course, you can do an estimation of the capital appreciation of property, but who can actually promise you the amount?
Yep. Not to mention, when selling a property in Malaysia will require sellers to pay the property tax known as RPGT, where you'll be taxed on your profit gain when selling a property, and the rate is determined by how long you own a property.
So when you look at how the average rich people in real estate investment, they only bet on things that are under calculation. When it comes to rental yield, as known as cash flow, it is a wealth generating tool where, for example, your monthly installment for a property is 1,400 and your rental is 1,600. So this can cover up your monthly installments while producing some positive cash flow.
That's 200 ringgit extra.
Yep.
So retirees or those wishing to live off investment prefer cash flow investing over young generation seeking to build wealth. Cash flow is noticed when you purchase an investment and hold on to it. Every month or year, that investment returns money to you. So cash flow investors, unlike capital gain investors, typically do not want to sell their property because they want to keep collecting the regular income of cash flow. Like they say, cash flow is king.
Even if you're buying a property under market value and instead of fixing up and selling it, you rent it out. Every month you collect the rent and pay the mortgage and expenses. If you bought it at a good price and managed the property well, you will receive a profit or positive cash flow.
Yeah, cash flow investors have more certainty and fewer concerns compared to capital gains investor, whether its market is up or down. So cash flow investors are looking into the long-term trend and are not affected by short-term market ups and downs.
The best part is that the money keeps flowing into your pocket whether you're working or not. You could be retired, sleeping, or doing whatever anywhere, and your money works for you. Even during bad times, money still flows into your pocket.
So not to mention, cash flow is known as the passive income or rental income, which has a lower tax rate compared to capital gains tax. In some cases, the tax can be very high.
With cash flow, not only it can cover your monthly installment for that property or generate some pocket money, but imagine if you finish paying for the loan, the monthly installments, and now you're just having pure cash flow. This cash flow can be used as an income to help you with your next purchase.
Yep, the main difference between cash flow and capital appreciation is cash flow focus on income generation while capital appreciation focus on assets increasing in value.
Secondly, cash flow is predictable by looking at rental rates around that area, while capital appreciation is less predictive because it is uncertain.
Thirdly is in how long time that it takes to accomplish the desired result. The goal from cash flow investing is accomplished when the expected income flow into your account. So cash flow investing is also referred as income investing. This usually occurs monthly. On the other hand, accomplishing the goal from capital gain investing often takes years, while there are exceptions such as flipping real estate.
In our opinion, both capital appreciation and cash flow are very important in terms of investment. If you're looking into buying a property for your own stay, it is a bonus when your property has a good chance of getting a good capital appreciation. But when it comes to buying a property for investment, we would usually suggest going for cash flow. Usually a property with a good cash flow, capital appreciation will come itself too, unless you're looking into the secondary market where the property price are capped. But you get a good cash flow where the data is provided.
Yep, so come to think about it, people call all sorts of property assets, but assets generate you the money instead of causing you to cough up the money every month. Of course, it is still your own opinion, but if you want to look into capital appreciation investment, we suggest you to buy the property, hold on to it for 5 years, more than 5 years, firstly to lower down the rate of property tax, RPGT, while you give more time for your property to increase in value. While holding on to that property, do rent it out so that it covers your monthly installment at least partially. Instead of for the property being a liability, make use of it, rent it out at least to cover your property interest or installment, even better to get positive cash flow.
Yeah. A lot of investors focus on both, where they buy a property at a good location which can bring a good capital growth and also has a good data in the rental market.
So to conclude this, we think that putting your money into property investment is a way to preserve your money against inflation, as time helps to push the value of your property. The question you think now is, do you really make money? In our opinion, the real deal is rental helps with the money making.
After all, we've mentioned the choice is still yours. This really depends on your investment objective. A lot of parents are encouraging you to do property flipping, and if that's your cup of tea, then go for it. Regardlessly, we do hope that you gain what you wanted in your property investment journey, and we hope this helped you to clarify which you should focus on.
Yep, so that's all from us today, and thank you for watching. If you gained some new knowledge from this video, do give us a like, consider subscribing as we post a lot of property, real estate related content here in this channel. Join our VC family, and we will see you
in the next video.
Ciao!